Hey, Tom here, FlipAnythingUSA. So back with the real estate ninja. I know he's the economic ninja, but he's also the real estate ninja. I'm not exactly sure why he thinks he's a real estate ninja. I don't know that he's got a ton of experience. I haven't seen much property. People have told me to look more closely at him. I think seems like a nice enough guy. I think his name's Travis, but apparently he's coming up my feed as people say. In other words, we seem to have some crossover, people watching him and watching me. So what the heck, let's get on with this.
It's the best thing I ever did.
And let's start here.
Going to do a video. I'm going to show you a couple of charts based off of an old Substack.
Also, I got them sped up about 1.25 speed.
Out of December of 2022. And the reason why I'm going to do this is I'm going to show you through charts, and I'm going to go much in greater depth in a video in the real estate crash course to really reaffirm people in where we are in this real estate cycle, why I know that homes are about to explode, inventory is about to explode, and the price of homes are going to go down. You're not going to hear this anywhere else because most people can't see it for what it really is. And this is identical to the last cycle, but greater, almost like a factor of 10. All right. So it says right here, and this is out of, now I want you to mind you, this is out of December of 2022, okay? So a little bit less than a year ago. Existing home sales decreased to 4.09 million SAR in November. It says here, existing home sales declined for the 10th month in a row in November. According to National Association of Realtors, all 4 major U.S. regions recorded month-over-month, year-over-year declines. Now, a lot of people would read that title and they would think, okay, yeah, that's been like the case for the last couple of years. That's not the case. I'm going to show you some charts that'll blow your mind. Total existing home sales completed.
So look, I'm going to give you some background on me. I've been investing for 42 years. I bought every year for 42 years. Not a year went by that I haven't bought a property. I've bought, just over 200 properties in the last 40 years. I'm about, average 4 or 5 a year. Sometimes I've had, one a year. Other times I've had, probably 10, maybe even 30 one year. But the bottom line is what I can tell you quickly about real estate is the main economy you got to worry about is the one you're directly affected, the one that you're a part of, which is really 20 square miles around you. Okay, if you foolishly invest far away, I mean, you can suffer the consequences of that for sure. But I generally I can throw a rock and land on a property I own from where I'm sitting. I can keep throwing that rock, and I can hit tens of millions of dollars of real estate that I personally own, personally negotiated, no partners, and that's and we're talking about commercial, residential, retail, industrial property, land, everything. And that's why people find me to be a really good mentor, because the kind of real estate I've been buying for the last 42 years is the kind that most of you watching can afford. Also, please hit that subscribe button, hit that like button while you're here. I don't think you want to miss. If you're interested in real estate, believe me, you found the right place. If you want to get knowledge as an investor, been doing it a long time, got a track record second to none. Urge you to compare me to all the gurus out there that everybody knows I'm quite hard on fake gurus because I think they're terrible for young people. People trust people based on their personality and whatnot, and then next thing you know, they're making a bad decision, or they're throwing $8,000 at some stupid course that isn't going to take them anywhere. So, by the way, listen, every Thursday, which means tomorrow night in this case, but every Thursday night, 7 p.m. Central, get into one of my free webinars. I show you how I made my first million in the 80s and how I've made tens of millions of dollars since. All real estate, that's all I really know is real estate. To be quite honest, I've had some successful business too, but primarily real estate. Nothing's come close to the money I've made in real estate with everything else that I've ever done. Also, I got a book, Wake Up and Smell the Real Estate. Be sure to check that out. And let's get back on with Ninja.
Did transactions that include single-family homes, townhomes, condominiums, and co-ops waned 7.7% in October to a seasonally adjusted annual rate of 4.9 million in November. Total housing inventory registered at the end of November was 1.14 million units, which was down 6.6% from October. And people are like, yeah, well, that makes sense. Less inventory, prices are going up, especially because the dumb money's flowing in. So let me start with this chart. It says here the sales rate was below the consensus forecast. Now, this is what you need to understand about this chart. And let me start here. This chart starts in 1994. The recession of 94 isn't shown in this because it was right before that. But from 1994 till 2006, this was existing home sales. So this is 1994 right here. This is 2006. home sales just going up, up, and up. Now we saw a fall, right, in home prices where they bottomed, not during the Great Recession, which is that massive band, but past the Great Recession. We were already out of the Great Recession, and this was in between 2010 and 2011. Then we see this other march up. Now I want you to understand why. First off, from here to here, we had rates going down in a downward trajectory, right? Until right about here, 2004, we started seeing the Federal Reserve start raising rates until it hit a top, and then we saw a collapse. Same thing here. We saw a Federal Reserve lowering rates from here down, and then they stayed low, artificially low, super for a long time. And then we saw this, the COVID drop, and then we see this. Now, this is what is very important to understand. This point matches this bottom, and it hasn't even gotten to the bottom of 2009 yet, all right? These are sales. That
So
means
look,
it very,
in
very tight market.
2009, what everybody likes to call the Great Recession, everything just kind of froze up. And it kind of did similarly when we had the pandemic. In other words, all of a sudden, banks didn't know if they were insolvent or not, and they were quickly finding out. When we had the pandemic, things quickly froze up. There was a lot of political aspects to that I'm not going to talk about here, but the bottom line is, people couldn't show a home because everybody was afraid, and it really maybe only half the people were afraid. But that's all it took to absolutely freeze the market. People didn't want people coming in their homes, and so people couldn't show homes. It hurt everybody. But back in '09, they like to call it the Great Recession. I don't think it was that bad compared to. I made money through all of them. But my point is I just borrowed $3 million right before what they called the Great Recession. I borrowed it probably 5.5%. It dropped 3%. My interest rate went down to 2.5% inside of like 6 months, which on that amount of money, that saved me $90,000 a year just in interest, just on that one loan. And I got a bunch of loans. Well, anyways, let's keep listening.
Right? The reason why it was tight back in 2010, 2011 is because everybody was getting foreclosed on, and there was this period of time that it takes banks to foreclose on people. They were renting. Things weren't hitting the market because they were sort of in a suspended state, right? Because they were going through the legal process of getting those homes to turn back over and be available on the market. All right? All right, so there's that chart. Check this out. It says here, sales year over year, not seasonally adjusted. It says the second graph shows existing home sales between, and this is something that everyone should understand. Blue represents home sales in 2021, and then you see home sales in 2022, red, obviously falling off, and they've gotten much worse in 2023. All right? Super simple.
Interest rates are going up, and that's why. The bottom line is it's like 300,000 is the new 400,000. Because in other words, it costs you actually more to buy a $300,000 home today per month. If you borrow 75% of the money, it'll cost you more to buy a $300,000 home than a $400,000 home. A few years ago, it's just because the interest rate, and that's how most consumers are. They're not how much am I paying for it; it's how much a month, and that's the thing. People can't afford the payment. Now, if you're a cash buyer, it's simple. You can if you're unaffected, right? You can sell your home today, and even though the value's gone down, you can go buy it somewhere else, because it's gone down somewhere else, and you're not borrowing the money, so you're unaffected by the rates. Is my point. And I hold a lot of property. I've got about 185,000 square feet of rentals, maybe 20,000 of that is residential, maybe. That's generally what I mostly turn. I got a dozen houses roughly. But primarily what I have is, commercial, industrial, retail centers, and these things just cash flow. And in fact, I'm 100% occupied, and I don't have much trouble keeping things occupied like that. We'll keep listening.
This is what I want to show people, and this is what people don't understand. And it's something as simple as this that proves the point of where housing's going to go. All right. Everyone says we're in a housing crisis, right? That there are less homes available. That's absolutely not the case.
No, it's just it's no longer a seller's market. When it was a seller's market, you had wholesaling's dried up for the same reason. So, in other words, there's less buyers out there, and there's less sellers.
There wasn't a massive fire that took out all the homes that were built in the last 20 years across the country. All right, they're all still standing. Okay. Do you agree with that? Type 1 if you understand that. Like a big a monsoon has not destroyed all of the millions of homes built in the last 20, 30 years. They're all still there. All right. And as a matter of fact, we have new construction. Okay. What you actually have is during times of low interest rates, historically low, on the back 1/3 of that timeline, let's say interest rates have been low for 10 years, right? The first 2/3 of that time, right? Let's say the first 6 or 7 years, the dumb money, and I mean dumb money, uneducated, like can't even pick up a book on real estate or really have a good conversation, like an educated conversation about real estate trends or why real estate goes up, why real estate goes down, things like that. People like that, they don't buy in that first couple 2/3 of ultra low rates. What happens is it takes them so long to hear it over and over, Billy down the street.
Yeah, I'm going to disagree with that. Listen, people come around to buying homes when they can afford to have them, and pretty much that's it. And low interest rates fuel that. But the other thing that low interest rates fuel is investors like me. Listen, I'm a very aggressive buyer. I've burned through a lot of property. When interest rates are low, yeah, I'm buying everything I possibly can. If I do some creative financing and create an owner finance situation, then I'll pass that on to somebody that can that has the cash to take me out, and so I got my delta covered, my profit, and then they jump in and take over the mortgage that I'd already kind of set up. But right now, with the interest rates as high as they are, a lot of people they're going to either keep their home if they have a job and they can keep. Everybody has different plans. That's what I love about real estate, by the way. Just look at this. Look at all this inventory. Look at all this inventory. Never-ending supply. That's why I love real estate. It's a never-ending supply. People are going to die, divorce, retire. There's just all kinds of reasons for more real estate to be available. So I can't imagine. He thinks that values are going to explode and go down. Values are going down. I've already seen a 15% drop in real estate. And the other thing, guess what? People going into contract to buy property, they're falling out. In fact, I was actually going to buy a truck here recently. It was a used truck. The reason I didn't get the used truck is because the guy I was buying it from, he was turned down for his loan. And so you're starting to see, in other words, people don't qualify for as much. Everybody, even if real estate stayed the same, even the value stayed the same, it really is if it went up. Even if it goes down a little bit, it's really as if it went up, because the dollar is going nowhere. In other words, your dollar is worth less. And the other big hit that we're all going to be taking here soon is that all the municipalities, all the city government, just straight across the board, they aren't taking in the revenue. That there's not as many building permits being pulled. A lot of stuff has changed. And so what do? That the numbers go down, they still need the money, because that's the city's normal thing, is they spend more than they take in the previous year. So as a result, unfunded mandates and everything else, they need cash. And so what are they going to do? They're going to raise the rate. So even though the property values may go down and your property will be reassessed and taxed a little bit lower property value, they'll push the rate up to make up the difference. And so, of course, the taxpayer gets no benefit from it. But let's keep listening.
Streets making money flipping houses. Sally just bought a house and it's appreciated $60,000 in the last couple of years. Tom down the street is building homes. And what happens is they hear this over and over, and it takes so long to get through their brain that all of a sudden they go, man, my rent keeps going up. Well, yeah, that's true, because rent's going up as homes are going up, because as home, payments go up, rents are easily tracked behind that. And they go, man, there's got to be something. And it forces them, wait a minute, all those people are making money in real estate. My rent's going up. I wonder how much it would cost to buy a house. And in the last 1/3, you have that blow off top. Okay, so this is what I want.
So there is a certain aspect of people he is talking about. I'll give him that for sure. Is people, they're just late to the game. That's why I tell everybody, listen, you got to start building your knowledge base now. Start getting some skills. And it doesn't matter if you do it. You want to do it as soon as possible. But listen, whether the economy is down or up, people say, oh, the economy is too hot. Don't buy anything now. Things are too expensive. Then other people say, oh, no, the economy is going down. Wait till it gets better. Everybody's always got an excuse not to get in. I've never used any of those excuses, and I've made a fortune doing so. And by the way, let me just take a peek real quick. If you don't, these are my people in my class. You see right here. These guys have made, from $100,000 to $3 million, and I got a lot more than this. I got so many people now that have made hundreds of thousands and even multiple millions. This guy here has done extremely well. Richard here, he's realized over $1 million in cash, but he deferred it and he rolled it, just like I teach him in the class. And now he's got like a roughly $150,000 a year income coming in. And he's got about $1.3 million or $1.5 million in equity in the buildings that he owns. And he deferred all that cash gain that he made on the first 3 cash deals. So same here year. At this time, he'd made 600,000. Now he's up to $1.4 million. Tina, awesome girl. She's made about 70,000. Ron here has made over three. He's got $4 million left real estate, and he's got only $1 million debt associated. And he's did that in 2.5, 3 years. Garrett, another success story, trailers and apartments. Chris here, I just did a video on Chris. Be sure to watch that. Quit his job at the church, and he's full-time self-employed. And Liam, it just goes on and on. And so, anyways, let's get back to the ninja, but I'm telling you, there's always opportunities. Doesn't matter if things are going up or down. I think, ninja here is a little bit of a doom and gloomer, and I just want everybody to know it doesn't matter whether things are up or down. You can make a lot of money in real estate. Don't be a speculator. You buy below market, whatever the market currently is. You just have to keep your eye on it to know what the market currently is. And by the way, I've got a book. If you don't have my book, get my book, Wake Up and Smell the Real Estate. Been a bestseller on Amazon, Audible, and Kindle. Now let's get back to the ninja.
I want to show you, this is not a housing crisis. What happens is you have more people that would be renters that are now diving into the real estate market. This is a chart of housing inventory, okay? Existing home inventory, all right, for sale. And I want to show you, first off, this starts in 1999, all right? Right as the dot-com bubble was hitting its peak and then popping and going down. You see here, this is 1999. Housing started to increase, right? Available inventory. Why did that happen? Well, it's because people started seeing the money making in homes and they started to revolve. They started to turn over and they started buying and selling homes, right? And then right about here, that's when all the people because I started buying homes right in 2001, right here, okay? The Federal Reserve...
So even he was a little bit late to the game. But I mean, I don't know how old he is. Maybe he was 20 then. I don't know.
...was lowering rates from the dot-com bubble into this time, and then they started to raise rates in 2004. And what you see is when they started to raise rates, all this building exploded, and we see all this inventory in the market, new tract homes for sale, things like that.
Yeah, listen, let me explain something. That's not all rates. The economy was surging. People were working. That's a huge thing people don't seem to understand is when people are working and making money. It's just like one of the reasons we're in the mess we're in right now is because the government gave away so much money. They did so much stimulus. They gave it to people that didn't need it, people that had jobs. My daughter included got a check or two that she didn't need. She wasn't unaffected by the pandemic. She had a job. But they, instead of the government just giving people stimulus, giving money to people that needed money, people that didn't have a job, they went way beyond it. They gave everybody a check, like a participation trophy. And so then people spent that money, wasted it. They bought Bitcoin, all kinds of stuff got wasted. And of course, those stocks went way up. Now they're crashing. And so people did a lot of stuff like that foolishly with their money because that's just Mother Nature. I mean, that's just the nature of people. When you don't earn it, you don't respect it, and then you waste it. And so we had tons of money wasted in the last 3 years. And now that money's dried up, not coming back. And now, look at Amazon. They way overbuilt. They thought everybody's going to be stuck at home forever, and they proceeded to rent warehouses and all stuff all over the country that are sitting empty and that they're subletting now to other companies. They're not occupying, they rented them, but now they're subletting them to other companies because they misjudged the market. They thought that it was going to go on forever, but it didn't. It didn't. So let's keep watching.
And then it exploded because that foolish money rushed right in. Now, this is the most important part of this chart.
See, there are people that are late to the game and then jump in and then things start to go down. That happens. But anyways, we'll keep listening.
Ever since the bubble popped and inventory peaked in 2007, man, this is amazing. Look at where it's been going down from there all the way down ever since. This is not a 2 year ago thing, but all this time as homes are going down in price, inventory is getting tighter and tighter and tighter. Why is that? Well, interest rates have been dropping ever since that peak. Okay. Now, where are we now? We are right here again, but over here.
No, things are different. We have just crazy inflation going right now. And so everybody's dollar is every dollar you make is worth less. Look, just in the very short time, you've all seen it. I have a thing in all my leases. We call the CPI. I adjust the CPI on all my triple net leases. So and that's basically tied straight to inflation. So If inflation basically goes up 3, 4, 5%, I can go up that much on rent. I don't always do it, but I have the option to do it. And but what has happened is I've seen haircuts, because I have all kinds of, listen, I have barbers, I have massage parlors, I have secondhand stores, restaurants and bars and, dry cleaners, the normal stuff you see in a lot of strip centers. Those are kind of the tenants that I have. Then I have about tons of manufacturing as well, and people manufacture. And when the economy's going and people are spending, everybody's buying. Even, listen, I started in 10% interest rates. Real estate wasn't dead when I began. And it was doing well. It was coming back. It was kind of coming back. But we had all this other fact. But right now, it's really strange right now, is because the interest rate is actually relatively low if you've had a lifetime as long as I have of investing, but it's high relative to recent times. And that's the gotcha, is the people that bought and got a low rate. They don't want to lose it. They don't want to give it up. They're going to hold their property. There's a lot of new money. Like, there's different factors. Like the stuff he's talking about, it's not straight across the board USA. The interest rate is, but not necessarily the economies in every area. If you've got, like, if you're near a city area with city government, everywhere there's a capital, it just seems like in general around that capital area, there's a lot of jobs that people on the government dole that do well, and it kind of keeps up big universities. It's kind of the same thing. But let's just keep watching.
The reason why I say that is because interest rates are rising, and it's just now that point where you see all those foolish people in the last 2-3 years rushing into houses going, oh my gosh, if I don't buy now, rate.
Well, and there's some truth to jumping in and get it before the rate goes up any higher. People refi for that same reason. That becomes kind of the economy, refi, because interest rates are dropped, so people start refining, and then that's an industry. Refi is, sometimes that's what drives it. It's kind of like hail falling from the sky. All of a sudden, the storm chasers, the roofers, the windshield people are all back in business because the storm fell. Well, that's kind of like, interest rates drop, people refi. Interest rates start going up, people start to refi. They start going to fixed rates. But I haven't even seen any of that now, because we're beyond that now. The interest rates have gone up so significantly in the last couple of years that people are just like, oh, I'm stuck. They can't sell. They're upside down on their properties, many of them. And the bottom line is, if they have a financed property, wherever they go, it's going to cost more because the money's more expensive. Also, the other thing, like in states like mine where we don't have a state tax, people are coming in here by the droves. They're taking, property they inherited or maybe they sold in California or New York, and then they're moving into Texas and other states that don't have state tax. So it's great for those states, bad for the ones that they're fleeing. So there's a lot of things that go into it. It's not just, it's not all global, So like I say, you got to look at your area, the area that you live in, and look at what's around you, what's alive, what's working, who's busy, who's not, as far as industry goes. And then, then you make a better calculated decision.
It's going up. I got to get in. Inventory is hitting the market. You're going to see the census data come out in January. That's going to show all these new homes, the spec homes that closed, that were off market, all these off market homes during a hot time. They don't hit until the census data comes. It's not real time. And you're going to see this massive, these numbers of all this inventory that's hitting the market, and they can't sell it. And
they're not even completing it. I have, banker buddies, and they're telling me, yeah, Tom, nobody wants to go to the next phase. They're just stopped. They're not even finishing. I know in some cases, not even finishing the houses. We have some developments where people are just walking away because there's just nothing left. It's like, if they finish it, they're going to be upside down. So it's like, cut the losses, don't throw any more money at it. And some are just walking away. So it's starting to happen. Where the crash is starting to happen in a more significant way, and it will get more significant.
This rollover effect in people not able to move, but as layoffs start happening and getting worse, they're going to start moving, and you're going to see this get worse. It's going to be amazing.
Here's the other problem we have is that we probably have 10 million new immigrants in this country or something like that. And because of that, and we're talking about, we have kids, and we got a lot of kids with problems, by the way. If you look around the schools, there's kids that have big learning disabilities that are coming in from different countries. And some of these kids require like an independent hand holder, for lack of a better term, like a caregiver within the class. They're mixing the classes with these kids that have tough mental issues, with kids that don't, and it's making it very difficult for the kids that want to learn, that are being disrupted by kids that might have some sort of emotional emotional disability that makes them loud. And so I see it. And we get kids with, they can't even say the letter sounds. They don't even know the letter sounds coming in from different countries. And so the teachers are like, they're just kind of going bonkers because they can't, it's just too tough. They're trying to teach, the kids that speak English in there, and then otherwise you got a huge influx of a lot of Hispanics too, but not exclusively. We got 200 different countries pouring over the border now from Mexico, and so it's becoming a big strain on everyone and the system. And those people need a place to live as well. I think I see a lot of micro homes in the future and trailer homes, and who knows, maybe somebody will come up with a super great tent that people can live in, and you start renting a tent space. I don't know. We'll see.
But nobody talks about this because they don't know that these are the exact same cycles that happened in 2006.
Yeah, I don't believe these are the exact same cycles. We have very, very different factors going on here. Very, very different.
2008, that time period. And that's the time period we're in right now. A time period of, rates have gotten super high. Nobody can move. Oh, crap, people are losing their jobs now because the financial sector is going down. Exactly what's happening right now. I put a few links down below. The real estate crash course. If the course is not $250, it's not on sale. But I'll tell you this, there's a new class coming out. And because I do these on purpose with specific timing, because now people are having that finally figured out. And they're going, oh, I got to sell my house. I can't sell my house. Nobody's showing up. I made a new course. It should be done by this next week called Home Seller Pro. And everyone is included in that owns the real estate crash course. So it's like getting 2 courses for the price of 1. And then after that.
Anyways, good job, Ninja, on your presentation here. Of course, don't agree with a lot of what you said, but that's the norm for me. Those of you who just got here, I know we have a lot of crossover people that watch, and welcome new Ninja watchers. Please hit that like button, hit that subscribe, and if you want a different point of view, and you'll see I definitely a big fake guru basher. If you haven't check out Fake Guru Friday, I do that every Friday. And then, of course, get in the webinar. Get in the webinar every Thursday, 7 p.m. Central. All you got to do is go to FlipAnythingUSA.com/webinar, and I will show you how I made my first $1 million. In fact, I just happen to have this book with me right here. This basically is HUDs and basically deals that made up my first $1 million between 1981 and 1990. In fact, the last deal was 1990 that I closed in there. And there's not a better way to make a fortune in real estate. So urge you to get into the webinar and hit that subscribe, and be looking forward to seeing you sometime soon. You want to learn how to make millions of dollars in real estate? I've made tens of millions over my lifetime, and I'm showing people how to do it. Get in my free webinar. I have it every Thursday, 7 p.m. Central. Go to the link below, FlipAnythingUSA.com/webinar. Sign up for it. You can talk to me face to face if you want. Don't waste any time. Hit that subscribe button, hit that like button. You don't want to miss my channel. I've been doing it for years.